Hey everyone, we're going to break down the 2025 federal budget here in Canada, and more importantly, what it means for interest rates, mortgage holders, and anybody thinking to buy a home. Of course, we know that the budget has not passed yet. They still need a couple members of opposition parties to vote for it to pass because we have a minority government. But let's talk about what's in there. The short version, the budget spends more, but not in a way that overheats the economy. That means the Bank of Canada actually still has room and arguably the need to continue cutting interest rates. So let's unpack that just a little bit. The big picture, the federal government is planning to run larger deficits, kind of more or less double what it's been, what today's level is, through to the end of the decade. But here's the key part: the federal deficits are still only about 2.5% of GDP on average. In global terms, it's actually pretty modest. Countries like the United States, the United Kingdom, and many European nations are running much higher deficits than that right now. So, yes, spending is up, but that isn't a flood of stimulus money going into the economy. Where's the money going? Most of the budget focuses on long-term investments, not short-term stimulus boosters. We're talking major defense spending increases, big infrastructure commitments, housing and transportation projects, and gradual tax cuts that have already been announced. These are big ticket items, but they're going to roll out slowly over the years. They don't suddenly pour money into an economy tomorrow morning, for example. So from an inflation standpoint, we're not really looking at any short-term shock, and we're not really pushing the Bank of Canada to have to raise interest rates as a result of government stimulus. In fact, it's actually quite the opposite. Because spending is mostly long-term and economic growth is expected to remain moderate, the economy's not doing so hot, analysts believe that the Bank of Canada is still likely going to need to cut interest rates, potentially even below its neutral rate, where we're at right now, in order to support growth. The neutral rate is that sweet spot where monetary policy isn't stimulating or slowing down the economy. Going below that neutral rate means that the economy needs some help, and that lower borrowing costs are part of the plan to fix that. So this budget does not disrupt the path toward lower interest rates, and it may actually reinforce it. So what does this mean for mortgage borrowers and for homeowners? Well, whether you're renewing or whether you're buying, rate cuts, those are still on the table. Long-term rates will follow economic growth and not government spending headlines. And housing programs will support supply, not just demand. We may still see and likely will see some bumps along the way, but this budget keeps us on track toward lower interest rates, not higher ones. Regarding immigration housing impact, well, immigration targets have been reduced, both permanent and temporary residents, and that is a shift. Lower immigration growth could mean slightly less pressure on housing demand, a gentler path for rent and for home prices, but still strong population growth, however, more manageable than it's been over the last decade. Again, this supports the case for lower interest rates, not higher. So the big takeaways here are: this budget does increase spending, but somewhat responsibly. I know that not everybody's going to agree with that statement, of course. It focuses on long-term growth and not short-term stimulus. It doesn't really add inflation pressure, and it strengthens the case for the Bank of Canada to do more rate cuts. So if you're waiting for rates to fall, this budget is going to help you. It's certainly not going to hurt. And if you're renewing or entering the market, 2025, and because coming into 2026 here, is shaping up to be a more favorable rate environment. If you'd like me to do a follow-up video to break down maybe what rate cuts could look like month by month, or should you choose fixed versus variable right now, or even what does this mean for home prices in Edmonton, in Calgary, Alberta, even across the country, just comment below, send me a message. I'm happy to help you navigate this market with confidence. Talk soon.